Welcome to Dollars and Cents with Freedman Financial, the home for financial advice in a language you can understand. Created by Marc Freedman of Freedman Financial, he and his team of certified financial planner professionals will discuss timely topics that help individuals and families make smart financial decisions. And now, get ready for this week's edition of Dollars and Cents with Freedman Financial.
Welcome back to another edition of Dollars and Cents with Freedman Financial. My name is Marc Freedman.
And I'm Marion Gilman.
And we're here to provide you with some financial advice in a language you can understand. And if you're like many of us, you're enjoying the fact that you're sitting in an air-conditioned location right now.
Oh my goodness, it has been really brutal.
Oh, God.
How's that pool going?
I finally went in my pool actually last night.
Oh.
I went home. And we hadn't started dinner yet, and I said to Laura, what are you doing? She says, well, we'll have dinner around 7 o'clock. I go, great, I'm going in the pool. And I didn't even think twice about getting in the pool. It wasn't cold, it was just, I just didn't care. I just wanted to get in the pool.
Yep.
It was great. I put on the music, just floated around in the pool, and it was wonderful.
Such a relaxing time. Isn't that nice to have that to go home to?
It sure is. And after what we just did we were in Japan a couple weeks ago, and it was so hot and humid there, where you're outdoors walking all the time, it's nice to be in places where you can either cool off in a pool or have air conditioning.
Right. At least here, we're in air conditioning all day. So
we are.
Yeah. So we can't complain too much about the humidity.
No, but it seems like this is the time. Lately, everybody's been complaining about something these days, haven't they?
It certainly is, and I think that a lot of that has to do with the news.
It is. You're absolutely right. And I continue to be amazed by how people have different perspectives on what's going on in the world, simply based upon the very narrow pieces of information that they gather, which is then...
you mean the sound bites that we get through the news? Is that what you're talking about?
Yeah, the sound bites. And then on top of that, the algorithms that choose to deliver what the next soundbite and the next headline is going to be, that we totally forget about all the other stuff that's going on. Like, for instance, look, July 4th, there was these devastating floods in Texas, right?
Yes.
And as tragic, unbelievably tragic as that situation is, you or I might sit here and we're not thinking about that really at all.
We're so disconnected from it.
We are.
Well, but even you just gave us an example of your daughter who was traveling and there were torrential rains, right?
Right. We were here in Boston.
And there were floods.
Right. Mindy was trying to fly back from Washington, D.C. to Boston.
So this is even closer than
Right.
Texas, yeah?
And I'm like, she says, Dad, I can't fly home due to weather delays. I said, weather delays? What are you talking about?
Yeah.
And I guess there was terrible weather in New York and Philadelphia and perhaps in Washington, D.C. as well, that prevented her from flying home for 2 days. She had to spend an extra 2 days in Washington, D.C. And I'm here in Boston. We're going, weather seems to be fine here.
Yeah.
And so we didn't think about it. And it really wasn't all that heavily reported in the news either.
No.
It is really fascinating to me how little knowledge we have about what goes on, certainly domestically and absolutely internationally, right?
Absolutely. And I think the most dangerous thing now is that a lot of people get their news through social media.
Right.
And what do you get through social media? It reinforces, social media essentially has algorithms that reinforce what you've already read. So if you're not reading about floods in Texas or anything about Texas, you might never know about that.
Right.
Because they're not sending you that.
It's what's called confirmation bias. You'll hear that
Exactly.
word a lot, but the more and more we rely on social media, and we are relying on social media more and more.
Absolutely.
The information we get is focused in certain channels, and then the perspective on that piece of news can influence you to think one way or the other. And
it's amazing, isn't it?
And so, Marion and I do these shows, what we call the Marc and Marion show, if you will, once a quarter for our clients and for our listeners, and anybody else can tune in. And we often talk about what's going on in the world, what's going on in the markets. This time we talked about the big beautiful bill that just came out to try to help people understand how it impacts them and how it doesn't impact them. But we oftentimes open it up to our clients and say, hey, do you have any questions that you'd like us to answer? And so we got an interesting question this week from one of our clients, and we thought we'd try to offer perspective on his question that really, when you get it down to it, the question is, what's in it for me? That's really what he's asking, is what's in it for me? So,
Absolutely.
Mary, why don't you kind of rephrase that question?
Right. And so one of the things that we've been looking at over, actually since the beginning of the year is, and you've heard a lot about this in the news, and how great it will be once the Federal Reserve begins to lower interest rates. And we're all waiting for this because we keep thinking, oh, well, they're going to start to lower interest rates because inflation is going down. Although this week, I guess we got a number that was a little bit higher, or going in the opposite direction.
It's
Let's
still in
say
the twos.
Still low, but
it's not 9.
Yeah, exactly. But again, just sometimes things like that can just derail what's going on in the market. But in any event, so we've all been talking about lower interest rates. And this question came about, and this client said to us, okay, so, well, how does this benefit me? Because I'm in a very different situation. How would lower interest rates benefit me? I have a very low rate mortgage that I got, years ago when interest rates were very low. So my mortgage is under 3% interest. I'm actually receiving CD interest at the bank. And by the way, a lot of our clients are in this situation because either they have a very low rate mortgage or they have no mortgage. So they're benefiting tremendously from higher interest rates because they have money at the bank that they can now invest. I mean, for years, it was essentially zero. I mean, I would get pennies interest rate at the bank. I know,
Sure,
I'm sure
we all
everybody
did, yeah.
did, right? So what is the benefit of lower interest rates to me? I don't see how this is going to be of any benefit.
Well, when interest rates go down, it benefits certain people, doesn't benefit others. There's no question about that. But
well, I think it benefits certain people directly.
That would be, yeah.
And it does benefit others indirectly, but we don't really see that.
So let's back up a little bit. Let's back up 3 years. And when you look at the portfolios that you might have had, especially if you were invested in the stock market and even in the bond market, over the past couple of years, you've likely performed well if you've been invested and you've maintained your positions.
Right.
However, many people forget that in the year 2022, most people lost money.
Significantly.
And one of the biggest reasons they lost money was because interest rates were rising. Right? Remember,
Absolutely.
bank accounts were paying nothing. We all talked for the longest time. A high yield interest rate earning 0.5%, whoopee, it was nothing, right? But as interest rates moved up, as mortgage rates moved up, the bonds that people owned, the fixed income securities people owned, dropped in value. And in fact, many reported it as the worst performance in the bond market in the history of the bond market.
Yes, absolutely. It was the worst year for bonds.
Right.
But because remember, inverse
Right,
relationship,
inverse.
right?
Right. So now, after those interest rates stopped rising, people looked at their banks and they said, wait a second, the bank's now offering me a 4% CD or a 5% CD even. Wow, that's amazing. Well, those people that were investing in CDs and wanting to put money in the bank, it might have been a nice solution for them because they remember when interest rates were 12 and 15% back in the 1980s.
Yeah.
Folks,
We're not going back to
that's
that.
almost 50 years ago.
Exactly.
Almost 50 years ago.
Oh my goodness.
It's hard to believe,
Yeah.
right? But many people remember that. But when interest rates start to go down, many people have the opportunity to for instance, to buy a house.
Right.
Many people right now, and we hear the fact that interest rates are up high, if you were to buy a mortgage right now for your house, it's in the 6s, perhaps even 7s.
Yep.
Yet, as you can read in the paper, not many people are buying houses right now.
That's right.
Right? And those
right.
that are buying houses are paying cash for it and not borrowing money.
Right. So indirectly, this could benefit, lower interest rates could benefit, well, certainly would benefit the housing market in general. But for somebody who wants to move and wants to sell their house, lower interest rates would be highly beneficial because you usually can get a better price because mortgages are more available, and at lower rates, people can afford to pay more.
On top of that, from the mortgage perspective, let's say you got that 7% mortgage and now interest rates have dropped to 6 or to 5.5. And not that they're there yet, but perhaps they could get there. There's an opportunity to refinance now.
Absolutely.
Lower your monthly payment. Another place, if you're a small business owner and you're looking to grow your business, and one of the best ways to grow your business is to go to a bank and borrow funds.
Right.
No one wants to pay a premium interest rate to borrow funds for a business. If you can borrow at a lower rate, you're more apt to invest in your business.
Right. And also going back to your bond example, which was a great example, remember we said there's an inverse relationship. So if you're holding bonds and interest rates go down, the price of those bonds increase. So that's a direct relationship. So whether or not, and typically stock prices also do better because, as you just said, corporations can borrow at lower rates. So now their expenses decline because they can also refinance. Interest rates at lower interest rates, they're better profits because they're paying less in interest on their loans. So now they actually, prices on stocks would usually go up indirectly because of that.
Yeah, a lowering, a reduction in interest rates, when you hear that discussion, that's generally good for not just the market,
Right.
but for the economy.
Yes.
Because it says people have more confidence in willing to take a risk of borrowing money at a lower interest rate and using those funds to invest in something, whether it's personnel, whether it's upgraded equipment, whether it's starting new businesses, expanding, whatever it is, putting an addition on your home. And so think about all of the jobs that get created when we have money that we want to spend and invest in ourselves, in our businesses, in the future. Everybody benefits from that.
Right. And so for those of you who are working, indirectly it could benefit you as well, because if you wanted a new job or maybe you're facing potential layoffs, if the interest rates go down and corporations have more profits, they can pay their people more, and more people are typically hired.
Yeah, so of course, if you are a senior or if you're someone that says, I don't ever expect to borrow money again, the only interest rate that matters to me is the interest I get on my bank accounts or my bonds or my CDs. Yeah, you're going to be a little disappointed over the next few years if, and there's no guarantee, but if interest rates start to drop.
Right.
Frankly, we expected interest rates to start dropping a year or so ago,
Right.
as did many prognosticators. They will drop. I am absolutely confident of that. Can't guarantee it, of course, but I am confident that where we sit today at an interest rate level, it only makes sense that interest rates will drop. So
I'm not sure they're going back to the 0%.
Absolutely not.
Or the 2 point whatever percent you might have gotten on a mortgage back in the day. But from here, we would expect them to decline.
I mean, I think if you noticed, if you have a CD that's coming due soon, I think you'll see that the CD isn't necessarily being renewed at the rate that you just recently got.
Exactly.
And chances are, whatever that rate is, that could be around the best rate you're going to get for a while, because it could get even lower. So if CDs are the way to go, you may want to explore a longer term CD, a 2-year or even a 5-year, if you can get that better interest rate. It all depends on your situation, of course.
Right.
But we have to look at all of the variables, and that's what we do as financial advisors,
Right.
is to consider all of the moving pieces and parts of your financial life. And that's what we call financial advice in a language you can understand. So if now's the time for you to get serious about your financial planning and or investment needs, we hope you'll give us a call. 978-531-8108. That's 978-531-8108. Or Visit us on that thing called the World Wide Web. www.freedmanfinancial.com. That's Freedman.
2 E's and a D.
Financial.com. Go to the bottom of any page if you like. Put in your name and your email address, and you'll get our free weekly newsletter that comes out every Friday at 10:30 in the morning. More than 7,500 subscribers receive it, and we haven't missed a Friday at 10:30 since March of 2009 when we launched that newsletter.
Long time.
Long time. That's going to do it for us this week. If you have any questions, of course, feel free to reach out to us. Have a wonderful day, everybody, and thanks for watching Dollars and Cents with Freedman Financial. Bye-bye.
Bye.
During today's episode of Dollars and Cents with Freedman Financial, your host may have discussed specific financial planning and investment ideas that are for general information only and not intended to provide specific advice or recommendations. Please remember that investing involves risk and may include loss of principal. Always consult a certified financial planner professional, qualified attorney, or tax advisor prior to investing to determine what is appropriate for you. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.